Hey, Dan Passarelli here. Over the past week or two, I've been talking about the need, at least in my opinion, to hedge some of your long-term holdings, or, for an investor to hedge some of their long-term holdings. And that's what I did. That's what I've been doing. And I was about 75% hedged going into this, I shared some of the details about the puts that I bought a couple of videos ago. Now, one of the triggers that I talked about, which I think was in yesterday's video, was that we ended up below the blue line, the 50-day moving average, and closed below the red line, the 200-day moving average yesterday, and said that today's unemployment number would be a pretty pivotal number. And it came in a lot hotter than expected, which of course forced the market down pretty low. As you can see here, the S&P 500 was down about 1.5%, but it was down a fair amount more than that at some points during the day. So we closed a bit lower. You can see this pretty big red candle here. So what was I doing with my hedges? Well, look, so again, I was about 75% hedged. So I took off a little over 20% of the hedges that I had on, and I took off part of that at basically doubling what I paid for the put, and the other one a little more than doubling what I paid for the put. And so basically what that ends up doing is it ends up getting rid of some of that decaying, we can call it risk, even though it's an insurance policy, this decaying asset. Got rid of two of them, took my profit on them, and basically have still about 80% of that hedge on, but some of them are now basically paid for by the profits that I took on the other one. So, I don't necessarily believe that there's a need to be 100% hedged right now, because this is a long-term sort of thing that I'm talking about in this particular case. And so being partially hedged, what does that come out to? I don't know, maybe about close to 50% hedged, something like that, is a position that I'm really comfortable in, especially when I get to own part of that for free. Now, that being said, I also talked about credit spreads. And so, we did take some strides down closer to that 380 level. And this does give some pretty interesting put credit spread opportunities with the VIX up at 2480 on the close here. That might enable us to sell even below this initial support line, because that's the first line of defense. It's the first one that could be permeated. So I would sure love to have the opportunity to get myself a little bit of wiggle room and possibly even go out a little further in time to sell maybe the 370 strike as part of a put credit spread. Now, if put credit spreads are new to you, or call credit spreads for that matter, and if you haven't watched the online training that we are having a special encore presentation of that tomorrow morning, and it's really important to register for that. You can register for it at this web link that's about to pop up right now. This is Dan Passarelli, Trade Smart.